Good evening and welcome to Traders Group. Still got a couple of people just getting their sound, but let's get moving and have a look at the technical and fundamental backdrop for financial markets as they stand. First of all, starting with the S&P 500, I'm very interested in continually getting a consensus of where this market's going, both identifying new opportunities for investors to place their money and also a focus where traders should be looking for opportunity. So first of all, let's just look at the overall index to get a perspective of what we think is happening. So we're on the right side of the market. As we can see, the market has broken into new highs in the last 2 weeks. I probably was of the view that market was to have a counter trend, but it didn't happen. So it's continually, going to the upside. And in the context of its volume backing, the volume has increased, which tells me that it is probably going to continue to the upside in the short term. As I stand here today, there's an upward bias in this particular market. So looking at this particular picture, if I wanted to estimate where I believe it's going to go to, I've been trying to look at the markets and different ranges within the market, and I'm starting to look at this particular previous range, which incorporated two range. I'm looking for a point where I could find resistance. At this point, I don't see any resistance. When I incorporate the long and the short range, I've got a target on screen, and at that target, which is very close, maybe this week, early next week, that's the point where I'd start to look for some sort of resistance. What do I mean by resistance? I mean selling behavior coming into the market that tells me, from a volume perspective, that the bulls are starting to run out of steam. As I'm standing here today, I see no such evidence. Therefore, if you were to ask me, where is this market going in the next few days and weeks, it's probably going to continue to the upside until proven otherwise. And the proven otherwise is the introduction of negative volume behavior within the market, which doesn't exist. If I have a look at any fear that's creeping into this current market, I look at it and I don't see any. I just see a continuing downward trending VIX. I think I've taken off the trend lines which I had previously. It just continues to the downside, has been breaking into new lows in the past week. So there's no hedging activity, which is a precursor to maybe a market falling over and obviously hedging within financial markets. Other things that tell me this is a strong bull market, which may even be accelerating, which is in complete contradiction to a lot of things I hear, is the view of, or the perspective of, internal numbers that I look at in terms of advancing and declining stocks. I just did a study of the numbers because I remember I record these numbers every week. And what I was interested in is the advancing and declining numbers on each of these extensions, at the top of each of these extensions. And what I observed is every time we have a new extension, the volume of advancing numbers is increasing. So it's increasing with a greater number of S&P 500 stocks in the advancing category. So I've gone back on 3 of those spikes. The first spike, there was 250 advancing stocks. The second spike, there was 261. And the current market, which it hasn't finished spiking yet, it's 266. It's an expanding market. So there's higher levels of advancing stocks and lower levels of declining stocks. In fact, this week, the advancing and declining number was 266 versus 281 declining. Last week, 243 advancing. The week before that was 261. It is expanding both in number on each one of these extensions and also in terms of its numeric volume. It's important to look at the volume of advancing stocks. The volume of advancing stocks against the volume of declining stocks is 31% different. So there's 31% increase of advancing, that is the volume of activity. There's 31% more activity within advancing stocks than there is in declining stocks. If there was some sort of warning signals, it's obvious. You'd see an increased volume in declining, but it's not there. So I'm still, when I hear the predictions of woe, There's no technical or internal evidence to tell me that there's any such thing. In fact, I believe it's the absolute reverse. And I shudder when I hear people saying they're sitting in cash. It doesn't make sense to be sitting in cash with a strongly expanding market. I'm not quite sure, and I'm not saying anyone else in this room is sitting there in cash. I'm not quite sure what you're waiting for. The market is about to break into a new high. We'll probably reach that extension that I just put up on screen. Market will find a reason to pull back. In fact, just give me one moment. I just saw something. I just want to grab that range that I did. That was the small and the big range together. And it is a logical point for the market to pull back. Why? Because it's just as the market breaks into a new high. So there's two things that happen. Markets reject as they're coming up to a new high, and everyone goes, it's a double top, which is not true. Or the other thing is those people that have been sitting in cash since April finally decide they're going to miss out and jump into the market. So this is actually a very exciting time to be in. And since the beginning, and this is only in the last 6 weeks, I just had a quick peek at my portfolio. It's up 3% in the last 3 weeks, which is, in the last 6 weeks, which is, I believe, quite significant. Sorry, it's not even 6, it's 5 weeks, which is fantastic. So this is a time to be absolutely fully engaged within financial markets, have complete exposure, and stop listening to the news. Everything that is negative said about Mr. Trump is not really connected to the financial markets. And as I have stated previously, everything that he is doing is beneficial to the United States in terms of the tariff wars. And he is winning, if you want to call a win-loss, he's winning that war because everyone is willing to negotiate. They don't want a tariff war. And you might notice that's sort of ebbing away. The media's flogged that story to death. So they're not really talking about it anymore. They can't sell any more newspapers or subscriptions on the back of something which is stale. So this is an expanding market in the US. I'm fully committed, and I think there's some unique opportunities which are evolving, and they're just popping their head up in the last few weeks. I have alluded to them. That is consumer staples, but the big one, I believe, is healthcare. And I need to, personally, I've got a reasonable weighting in healthcare. I need to weight a little bit heavier towards healthcare in US markets. And also, for those people that are looking for trading opportunities, I believe there's significant opportunities to be found. I'll show you what I mean in a moment when we get to sector rotation charts. And also, I'll just pick up a few healthcare stocks and we'll have a quick look. So S&P 500, you know what I think. It's really strong. In terms of other indices that we keep a bit of a look at, IWM is quite significant. And interestingly, I jumped too quickly then. Just before I come online, I got an email from Alan. And I believe, I'm going to go to your email if it's okay, Alan. Just give me one sec. Alan is talking about biotech and semiconductors. Well, semiconductors is tech. Tech's the strongest sector, or one of the strongest sectors in the market. And biotech is what I just talked about, healthcare. So you're spot on in terms of your timing of looking for areas of growth. And IBB is interesting. It's on my list. So very, very good. I just find it interesting. There's lots of healthcare, and the strength of the healthcare is centered within biotech. Okay, I'll get to that in a moment. That's where I'm going to do a little bit of adjustment. So IWM from the perspective of just technicals looks really, really strong. In terms of its volume support, it is being supported by increasing level of institutional volume behavior, and it is looking absolutely fine. I would have thought that this would have pulled back to its trend line. It still may do so, but it's not what drives the US markets. It's interesting because it sometimes leads the market. So I won't place too much emphasis on that particular index. QQQ, I don't really look at it, but it's the tech index, and we're well aware that tech has had this massive rally and continues to lead US markets. That is the strongest sectors are tech and consumer discretionary. It's been like this for now months, but there's leadership, which is about to change hands. We'll get there. Just give me one moment. Okay, so what else is there around the world that is looking strong? The US is incredibly strong, but we have to look at the rest of the world in terms of growth. And I'm starting to re-look at the German index through EWG, the Exchange Traded Fund, and also FXI. I do note that a couple of weeks ago we had this huge plunge on EWG, the German index, and it recovered. And it's struggling to build what I thought would have been a inverted head and shoulders, because it usually in inverted head and shoulders pattern, the rally on the right hand side of the pattern is really strong and quite obvious, and it's not as obvious as I thought. In terms of volume behavior, it has ebbed right away, which means that this market, the volume support is not there to keep on pushing this market up, and it started to pull back. Therefore, let's forget the inverted head and shoulders pattern. At this point, it's just as likely it could do a complete retest, and if that retest breaks its low, something else is happening. So I'll leave that as it is. It's just that the picture in the past week has changed to slightly back to the negative. In terms of the actual DAX index, looking at the internal of German markets, it hasn't changed. It's done this massive, big, broad-based accumulation pattern, which still is grinding its way up. It's the right-hand side of the pattern, so that's unchanged at this point in time. Shifting across to Asia, first of all, FXI. Once again, in the last few weeks, I've been watching very closely FXI, and I drew this picture, I believe, last week. And my concern was that the depth of this pullback, if it exceeded 0.618, what we may have been discussing as a W pattern starts to look more like an inverted head and shoulders pattern. In the past week, it's exactly what has occurred. The market has pulled back. It has breached and jumped back above 0.618, but I don't know whether that's finished just yet. That is now predisposed to keep on falling into a capitulation, which would make it an inverted head and shoulders pattern. In terms of volume backing on FXI, it has gone dramatically negative from the past few weeks, which suggests to me it'll probably keep on falling and collapse. That is disappointing, and that means watch out for metals and mining. Metals and mining are generally correlated with the Chinese market, and that is one of my areas of concern in my own portfolio. I have been holding a few metals and mining stocks and happy to do so, but increasingly I see areas of the market where I could make more money, and that would be, when I'm about to discuss, healthcare and tech and consumer discretionary and consumer staples. There's three. Two areas are new, two areas are old. Coming across to the last chart, which would be, I was putting up the Shanghai Composite, just the chart that I drew in the last few weeks. In the past week, 1, 2, 3, 4, 5, the market hasn't necessarily continued to break down on the Shanghai Composite. I'll just leave that picture there, but it can't be a W pattern because it broke its previous swing low in July. Therefore, the most probable outcome of the Shanghai Composite chart is exactly as FXI. And as I've stated, the volume support is not there to push this market up just at the present time. So I'd have to, if you're asking me to forecast which way, it's going down. It's going to further break down, which brings us across. So just before I go too quickly, S&P US markets looking great. German markets struggling. Chinese markets probably still falling. So where does that lead us to our local market? First of all, let's go have a look at EWA, the Exchange Traded Fund, relating to the, Alan, I missed your comment, I'll pick it up in a moment, leading to what is a nice upward moving triangular pattern for EWA, which has had 1, 2, 3, 4 pushes to break through the top of this pattern. In terms of volume support, it is It's declined a little bit in the last week, but this particular chart is not where the action is. The action's on XJO. XJO is obviously the local index, and we've been following this triangular pattern. The triangles are the pattern of the month lately. This triangular pattern on XJO, it also has had 4 attempts at breaking. One, if you call the first one 1, 2, 3, and it tried today but fell back inside the pattern. Is it going to break out? I don't know. It's I've said this every time it got to the top of the pattern, here we go, and it failed and fell back inside. In terms of the length, usually markets, as I've stated many times, break out of their pattern 75% down the depth of the pattern, and it's probably there, if not very close. Therefore, it's going to happen soon, and I believe there's a great story behind this breaking out, and it's finance within the Australian market. Finance being the biggest sector which drives our market, followed by metals and mining. I think we have what's required to get our market moving significantly. I have stated many times, I believe we're in a really strong bull market. The reason I've made that statement many times, nearly all year, is because you look at every sector chart. Doesn't matter what sector chart you look at. I've just clicked healthcare at the moment. There's a strong upward movement in every single chart. It doesn't matter what I click. Healthcare, information technology, consumer discretionary. I'm not going to go through every chart. Every single chart is looking really good. That said, the 2 big ones, finance and metals and mining, which is a subset of material sector, obviously has to be in sync. So let's go and have a look at, just for a start, XXJ, which is the finance sector chart minus the REITs. We drew this picture days, weeks and months ago, and we are well aware that there's something that's kept our finance sector down. It's been the prospect of a gory Royal Commission, and as the negative news has come out, it's already has been impacted into the stocks that we have been considering, like any financial stocks, primarily the big banks. But all that news is actually in the market, and markets are a discounting mechanism. Therefore, sometimes negative news at this point can be a positive, which frustrates the hell out of people. Markets do the reverse because they've already factored in the worst case scenario. And hence, you see, even if we get negative news now, we're starting to get positive reactions. And that is almost a textbook, very broad-based, inverted head and shoulders pattern, which is very close to breaking to the upside in the very near future. If XXJ, the index for financial stocks, which includes diversified financials, it would include banks and insurance banks and REITs, sorry, not REITs, it's the only one it doesn't include, you would expect to see companies like CBA looking really strong. And I mean, CBA is still getting a caning, but it has done, sorry my screen's so messy, I really should clean it up. And I'll just put in a cleaner neckline. CBA has put in this broad-based accumulation phase. I mean, if it broke down from here and did a leg down, you'd totally hear me change my tune. But if this market breaks into a new high tomorrow, we have ourselves a confirmed pattern, a symmetrical left shoulder, a symmetrical right shoulder. The time at which it took to build the shoulders is correct. The minimum move to the upside is the depth of the pattern. I have already engaged in buying CBA quite a while ago, and I'm happy just to stick there and see how it evolves. If CBA is doing it, so is the other banks. I don't really look at each of these banks on a daily basis. Some of the patterns are looking pretty damn crude, but they're all reflecting the same thing. That is accumulation patterns on screen. So I believe banks coming across to metals and mining is what is required to support a break within our market. The metals and mining, due to, I think, the weakness in China, and also in the XMM chart, which is US metals and mining, doesn't look bullish at the moment, but is not bearish. It is doing a declining triangle, which usually is a continuation pattern which breaks the upside and has got a little bit of time to go. So you might see this particular chart track sideways for a little while. I'm not saying it's a growth area of the market, but it's not a weak area of the market. Therefore, when I look at the whole of our market together, it's looking really strong. And that strength is borne out. If I could just come across to the correct charts. Just give me one moment. I'm just coming across to the Australian GIGS level 1 chart. I have mentioned this for many weeks. When I look at the Australian chart, it looks as if most sectors are participating within the market, which is not unique, but it is interesting because it hasn't been the case with US markets. So we've got healthcare is a leading sector. Energy is still a strong sector, a leading sector. Consumer staples, leading sector. Information technology, leading sector. Consumer discretionary. So it doesn't matter how I look at this. REITs, leading sector. Utilities, leading sector. Metals and mining, warning. Metals and mining has been losing strength and has been losing momentum for many days, weeks, and months. It is at this point tonight or tomorrow, I will be reviewing any exposure I have because there is the prospect if we get weakness in China for maybe months to come, I could place my money in another area of the market and make more money. And those two areas would be either finance, which is developing on the left-hand chart, or healthcare, or energy, or consumer discretionary. I haven't made my mind up on that, but I'm going a little bit soft on metals and mining. I was of the view that would see a strong right rotation. It's getting too late. It should happen or should have already happened. As it gets into the weakening quadrant, what that means is you can see little movement. It doesn't mean bear movement. It just means little strength in that area of the market for days, weeks, and months into the future. So I'm probably going to do an adjustment within my portfolio to lessen any exposure to XMM and shift it to strength. The point I'm making about this chart, that would be the only area that is weak. Even when I come across to telecoms, I mentioned last week, it is showing signs of life. So there's only one area that is weak within Aussie markets, that is XMJ, the material sector. Let's come across to US markets, and before I move too quickly, there was a comment put in by Alan in regards to IWM. Just let me go to the IWM. Apologies for missing the comment. Looking at IWM, if you've got a blank screen, so have I, just let it come up. Alan said, IWM is in an upward moving triangle. Now let me clean up my screen, just address a few of the comments that have come in while I've been talking. And Alan, you are quite right. So we could almost call it a symmetrical triangle. I'm trying to make it look as symmetrical as I can. It is a symmetrical triangle, which is, again, it's a continuation pattern, which usually breaks the upside. Doesn't mean squat. It can do what it likes, but that's what it looks like at the moment. It's being contained within those two lines. If negative volume come in, can it break down? Of course it can break down. Could it break back to the trend line? Of course it can do that. It's just, that's what it is right now. Alan's saying take it from the low in June. And Alan, you're not wrong. Okay, so if I just clean up the chart, don't disagree with anything you're saying. Okay, so I was talking about CBA, and I also missed that comment from Alan. He was just mentioning, and it was on the news extensively, that the CBA's profit was down quite significantly yesterday, and the market reacted in a positive way, which is that one thing that frustrates the hell. I had people speaking to me the day before that occurred, and they were looking at buying near-dated puts. But the problem with that is the near-dated puts had implied volatility of 100% or more, which means even if the market gapped down, you can't make money in punting. Directional movement in extremely or ultra high implied volatility, it doesn't work. So I talked that person away from buying put options in such a crazy environment. There's no point. And the fact is, it went up. It did gap and then it went up all day. So good move just to stay out of the market. Okay, just coming back to the sticking with, the US market. I haven't covered the sector rotation chart. Just give me one moment. So I just want to come back to the chart first of all. So S&P 500. And just coming across now to a rotation chart of the S&P 500. This is what is really interesting about this particular chart. There is not the same level of engagement than there is in the Australian chart. XME warning, telecoms warning, XLE warning, maybe not if it does a rotation. Finance hasn't been great, but it's just coming to life. XLI warning, XLB warning. So where's the opportunity on this chart? Well, I mentioned this a few weeks ago. Here it is here, XLP. I think I mentioned this early June, and I'll go back and pick up the list of shares that I put up on screen. And I said to you back then, it is not obvious when a market's rotating from weakness that is an area of growth because the stocks have been declining and are just in breakout phase. And there's nothing really to get your brain around technically that they're about to make a bull move. I will say the same statement about this little sucker here. XLV, I have always had exposure to XLV. That is a really strong move. And I think if we had a look at the drivers of XLV, and Alan has already identified it because I've already worked it out, it is biotechnology. So it's a subsector of health, which is about to drive this move. So let's just go have a look at XLP, some shares in there. Let's go have a look at XLP, because for those people who have got portfolios, you should be gravitating some of your money towards these two areas, if not already. I've already got XLV, I've already got XLP because I've been talking about it for a while. So I just want to show you, because again, I'm going to repeat, it wasn't obvious. When we started looking at some some of these shares, these XLP shares, if you've got a black screen, that's quite correct. I think I picked the two favorites were COST, Costco, and I put up SYY. It's a bit slow in downloading, which had a big fallover and a big recovery. I'm just going to go down 5 or 6 deep, down to Procter & Gamble, strong upward rally, KO, Coca-Cola, strong upward rally. This is what happens when you're looking at the beginning of a move. It looks like, oh, what people do, they focus their eye looking backwards and they go, oh, this has been a bear market, this is not going to work, and they don't do anything. So KMB, strong upward move. I'll do 2 more. MDLZ, I said Z the other day, strong upward move. And the last one I'll just click up is Colgate. Strong upward move since June. And that is a dog of a chart. Looks like it's just having rally. I would suggest at the beginning of a retracted move to the upside. Okay, so that's consumer staples area. Very quickly, let me have a look at some of the healthcare sector shares, which I've had exposure for a long time, but I believe we're going to see some big growth. And these are not biotech. These are not necessarily biotech. So J&J, United Health, this is where you should be doing some work. I'll just do 4 or 5 of them. PFE, Pfizer, MRK, Merck, MDT, that's where I'm going to stop. I just very quickly, I didn't have time to do this, I dug out a list of biotechs. Just give me one moment. ALXN, I haven't even looked at these shares. I just wanted to see specific biotech stocks. And so these are not filtered. I've not looked at volume. MYL. I've got no preference for any one of them. So I'd have to go through these. So these are shares which are like consumer staples months ago. As we look at them, some of them, they look horrible. But this is where I believe the gold is, and I haven't dug it yet. I have to do the work to go through all the biotech shares, not all of them, but lots of biotech shares, and pick out the ones that I believe are the strongest. I'll just do one more, the VRTX. Okay, I haven't got anything specific to give you there, but I will have them next week because I have to do this work for myself. I only just picked up as I was logging in the strength of the US healthcare sector, and I picked it up on the sector rotation chart. Then I had a look at the actual price chart. So this is a price chart of healthcare, United States healthcare, and it is extraordinary. The rate of change of growth in the last 6 weeks has been exceptional. So that's telling me, along with the sector rotation chart, just because it's been 6 weeks, it could go on for 6 months or 6 years. Last time healthcare had a run, it went from 2012 to 2016. It was just crazy. It was all about connected to Obamacare. I have no idea if there are fundamental drivers in this, but I will work it out. I've only just picked it up, and Ellen's just picked it up. Just give me one moment. Ellen's just asked me to put up IBB on a sector rotation chart. And Brian, I see your question there. I'll deal with it shortly. Okay, what I'm going to do, Ellen, is I'm going to wipe out everything on chart. I'm going to put up XLV, and then I'm going to type in IBB so we can compare IBB against healthcare. So IBB is the it's the biotechnology chart. I'm not sure, there's something very strange on my chart. Okay, I've got an error on my chart. So that is not correct. It doesn't do right angles. I may have to go in and reload IBB. There's something wrong there. And I'll be mucking around too much. Let's just have a look at IBB on a physical chart, not a strength chart. Just give me one moment. Just going to type in. Just going to insert a row. IBB. Okay, so this is IBB, which is the biotechnology index. So it's a sub-industry ETF. Could you invest or trade in just that index? Of course you can. Or could you go in and break down the components of IBB and look for the strongest shares in the strongest sector, strongest industry of the market? Of course you can. It's exactly what I'm about to do. And it's not difficult. If you're looking for the components of IBB, just Google it. Just go IBB, Exchange Traded Fund, click the button, and it'll give you all the list of all the shares that make up that index. It's really quick, really easy. Brian has made an observation. Brian says, so many of these are tracking well above their moving average. True statement, and maybe I'm not telling you to buy them tonight. I'm saying this is an area of strength for your investigation. As a trader, you would look for an opportunity as dictated by a pullback back to the average, which would be the opportunity to buy safely. So if you are looking at something which is well above the average, that's crazy. We all know that. Good point. And you don't enter markets. So I'm not suggesting you buy any of these tonight. I'm telling you, that's where you want to do some due diligence for yourself and find yourself a list of shares. So I definitely will be doing that. I definitely will be getting, in fact, I have got healthcare exposure. I'm just going to go, I try not to look at my portfolio. So I've only got 4 shares, okay? I need to increase this. So I've got a therapeutics, which looks pretty damn good, break into new high. I've got BGNE, which has had a big pullback, not going so well. I've got PTCT, Therapeutics. These all look like biotechs to me. And I've got an ADAP, which is going horrendous, and I better have a close look at that. What I will do is I will get rid of maybe ADAP, and I'll build that list with a bigger emphasis on biotech, just as I did with tech many weeks ago. Knowing that tech was the strongest area of the market, I increased my exposure from 4 stocks to 1, 2, 3, 4, 5, 6. I've got 7 stocks in tech at the moment, which is pretty high. So I weight my portfolio. I don't evenly weight my portfolio. I optimize my portfolio towards strength. And I will give preference to those sectors which are in the leading quadrant in terms of portfolio construction. I did mention 2 weeks ago that FB, as we all well know from Tally, had a 20% fall, and I thought I was going to buy it 2 weeks ago. Not only did I think I was going to buy it, of course I bought it. Why wouldn't I buy it? I love buying stocks in a panic. Am I right? I don't know whether I'm right. This will probably have a pullback back to its retest its low. I don't care. It's fine. I'm in at about $176. It's a buy. It's a great buy. And I'm happy, and I'm going to hold it. So I don't want to get any more exposure to tech, but I definitely will increase my exposure to healthcare, and I will increase my exposure to consumer staples, which I cannot tell you right now what I've got because I've forgotten, and I don't think I put it on this screen. Probably the area of trading that I would go for it is tech. Keep focused in on tech and keep focused in on healthcare. 2 really, really interesting areas. Okay, I think I've done enough with equity markets. Let's come across to other areas of interest. I've done Australia. I'm just trying to think so I don't move too quickly. Just going back to the chart. I'm just slowing down a little bit. Coming across to XJO. I'm just wondering, it's at this time where I would be forecasting moves to the upside. Well, the answer is probably. This range here is kind of equal to this range here. So I don't think it's too difficult to preempt, and I've already done this, I believe. Even if I did it from here, at a very minimum, 1.61, I think it's going to go through there like crazy. I would have the tendency to use the next range up. I just don't know where to place it on this pattern. I'll use the base of the pattern. So usually these long-term sidewards phases of the market in these triangular patterns, I don't have the words for it. It's like the market's building up energy, and then it has a really big break. And that energy can be illustrated through what? The choppiness index. No one's asked me about the choppiness index for months. Let's go have a look at it. Choppiness index. And the choppiness index is an absolute extreme, which usually is the point at where that energy is released and the choppiness index falls away. So just in terms of its energy, pent-up energy, it's ready to make a move. And I'm fully exposed to the Australian market. I've got no adjustments to make in my portfolio, and I just look forward to make its move. So the only things that I'll be doing is a little bit of adjustment within the United States. Let's come across to energies, currencies, and I'll have another closer examination of XME, which I've given a bit of a warning signal. Coming across first of all to the currency markets. Let's look at FXA, which is obviously our currency ETF. First of all, I'll flick it over to a weekly chart. Well aware on this chart when it embeds on your side that the story's been fairly consistent, breaking out of a very slow momentum channel to the upside. Coming across to the daily chart, where all the action is. I drew this on the screen before I came into the room. I can see another symmetrical triangle on the pattern. So, I have to answer the question, or if someone asks me, where is it going to go? Is it going to go up or is it going to go down? Is that a counter trend for the next fall or is it the bottom of the market? The only other tool I've got is volume, and volume tells me that is a counter trend getting ready for its next fall. And the reason I can't see into the future, but what I'm observing is that triangular pattern has been forming. The buying volume has dissipated. There is no strength. Therefore, it tells me the most likelihood of what's about to happen is a break. Could it continue to go up a little bit? Yeah, it can do that. It can do whatever it likes. The last counter trend in the market, if you look at the previous one, took around 4 weeks. Here it is here. 4 weeks to the upside. What have we got? In time, it's about 4 weeks also. So it is due to have its next fall. That's good for those people that are holding US dollars. I'm one of them, and I hope it breaks to the downside. I hope I'm right, because I run an unhedged portfolio in terms of US exposure. If FXA is about to break down, you would expect, and it's against US dollar, I've got a US dollar ASX chart. First of all, take it onto the weekly chart just out of interest. This is the one traded on our local market, and we can see that it's been in a strong uptrend of late, but not for long. Coming back to the daily chart, if the ASX is going to break down, we would expect this US dollar chart to be breaking up. For it to break up, it has to do two things. It doesn't want to be breaking technical trend lines, which it hasn't really done. It hasn't done. And would also want to see a level of positive volume starting to come in on the instruments that I follow, which is the US dollar index and UUP, which is a ETF for the US dollar. And that would be a true statement. It's not significant, but it's there. There is a trend of positive volume coming in at this level. Therefore, I would not be surprised, but we'll stand corrected if it breaks down out of this off this trend line. But there's positive volume kicking in at this level, which says to me, it looks like it's about to break down. That says to me it's probably going to maintain its trend line. If it's going to maintain its trend line, it's going to break up. Things like gold, which has that inverse general relationship to the US dollar, is probably continuing to break down. Coming across to the gold chart, I'll embed it on the weekly chart out of interest because we've been watching this for days, weeks, months, and years. Alan, sorry, I missed your comment again. I'll pick it up shortly. It's been in this upward channel, and along with the Australian dollar and all other currencies, it has had this break to the downside. So it is a pseudo currency. Coming to the daily chart, ask and answer the question, is this going to continue to the downside? Interestingly, the counter trends in this particular instrument are extremely weak, 1 week counter trends, and the volume behavior is increasingly negative. So there's increasing negative selling of this particular contract, which tells me, is it going down or up? It's going to continue to the downside. I've got to start looking at actual gold because maybe I should be buying some physical gold. Usually when gold gets really low, at the Perth Mint, we have our Chinese friends, our tourist friends. They're out there going crazy, which is really fun to watch. And maybe I'll go for a visit, day trip out there and see what's happening. So, which is in the middle of our city if you're over here. So gold, I would forecast, strong down, and I've just got to go to a bigger chart. I love it when I see things, when things fall, I get excited. If it broke into a new low, I'd get really excited, and I'd probably start looking at gold stocks. I don't particularly like gold stocks, especially not in the last few years for obvious reasons. There's been nothing there. But it's interesting to watch. For gold to get moving, we need to see inflation kick in. Inflation globally is well and truly under control. There is no rampant inflation. That usually comes in the ladder the bottom, the back end of a business cycle. We're still in the expansionary phase of a business cycle where, interest rates are still rising. They haven't got to a point where they choke off business activity due to increasing cost of capital. So, this is not something that you look at the moment. It's something that you'd look at down the track. Alan had a comment for me. Alan asked me, before I get off currencies, to put the choppiness index on FXA. Give me one moment. I haven't got the choppiness index on this screen. Yes, I have. Here it is. Interesting. So choppiness is at an extreme, and that extreme is exactly the same, and I'm guessing that's why you asked me to do it. It's exactly the same as XJO. When you get sideward moving markets, the markets build up energy, for want of better words, and the choppiness index goes up. Then that energy is expended as it breaks out to the upside or the downside, and the choppiness index falls. The choppiness index is not a directional indicator. So, if you would ask me which way is FXA is going, I've given you my view basis something else. It's just telling me that this will have a decent break. When it breaks, it should be a strong break, and just along the same lines as the Australian market. Okay. Brian is asking, can you define energy? Brian, I'm going to take your question literally. Okay, what is energy in terms of energy markets? The energy market, if you're not asking your question correctly, if I'm not answering it correctly, just type in more detail. The energy market, so if you're looking at XLE, is more called the energy complex because it's not just one form of energy. It is many forms of energy, which is things like oil, heating oil, petroleum, energy support companies, renewables. Combined, they form up what are called energy charts. So Brian's now given me a little bit more detail. He's asking the question in relation to the choppiness index. Okay, so just give me one moment. I'll use XLE, and XLE has had a high choppiness index. It has been tracking sideways. We could also argue, I don't know whether we could argue that's a triangle. I'm sick of seeing triangles. We could also even argue maybe this is even a triangular pattern forming up. I never looked at it as a triangle. And once again, if it's a triangular sidewards pattern, here's the best example I can give you. Look at the bottom of the market. See what the choppiness index was doing here? Market's tracking sideways. Choppiness index is rising, saying that it's about to break. So I would suggest that it's probably going to break to the upside strongly. And again, the choppiness index is not a timing indicator. It's not a directional indicator. It just says sometime in the not too distant future, a big opportunity will occur. So watch me very closely. That's all it's saying. So it's not doing anything other than that. Okay. While we're on energies, I might as well just flick across to USO. And USO on screen has maintained its upward bullish bias, has not broken down its trend line. It has had a little bit of weakness of late, but I'm just looking at other information. That's why I'm going quiet. In terms of volume behavior, it's actually quite negative, but there's no technical break. Therefore, irrespective of the negative volume behavior, that's just the counter trend. For me to get excited about this doing something negative, I'd obviously have to see an actual break of trend. At the moment, what you're looking at is called a three-wave structure, which usually comes back to the trend line. It's very bullish, so I won't say any more. Last point that I have been watching, or last major area of the market, is XME. I have got some exposure to XME, and I do make note, I haven't reacted to XME because it hadn't broken trend, but something's happened within this market which sends off an alarm signal. There's two things. I've already showed you the sector rotation chart, which in the US has rotated into the worst quadrant, and in Australia it looks like it's about to, and this chart's broken trend. In conjunction with that break of trend, I see a massive shift in the negative selling volumes coming into XME, which tells me, and it's rather significant, which tells me this is not just a break and a bounce, this is a break and a fail. Therefore, I have already said to you, I'm going to review my XME exposure. It's not huge, but it's there. I would rather, even if I've lost money, sell my losing XME stocks and shift it across to the strongest area of potential growth, which is healthcare and consumer staples. I want to jump on a train which is leaving the station, not one that's being shunted into the repair yard for the next few months and it's not going to move. So that's what investing is about. It's about going with the strength and getting away from weakness. Just give me one moment, guys. I'm just having a look at my pad. I just need to make sure I've missed nothing. I think I've covered it all. I've done indices, done all the components of the market I usually do. Shown you the XLP list that we put up since the 1st of July. So next week, I better mark up my pad right now. Next week, I will do a thorough analysis of what Alan's pointed out, and that's stocks in the healthcare domain which are related to biotechnology. And you must remember there are many sub-industries of health. And the biotech could be even, there's biotech sub-industries called genome research, cancer breakthroughs. This is actually a little bit of work, but I will do it because I want to do it for myself. I'll probably do it tomorrow, and I'll have that list available to you next week. Have we missed anything? No, we haven't. It's only just starting to occur. And as I said, once it starts, it can go on for days, weeks, months, and even years. Alan's just asked a question. And I've got a couple of questions on the screen, one from Lindsay, one from Alan. First of all, Alan's asked a really interesting question, which I need to know, and someone in the room might have. I'll read the question out direct. It says, who's the Aussie company that had the breakthrough in hydrogen production through a specialized membrane? It wasn't a company, it was CSIRO. So what you'll find, Alan, the guys on telly, if you had on New Zealand telly, it is CSIRO scientists who will find a partnership in the industry somewhere. It is a huge breakthrough. It is makes me so happy that they're saying we have to get it completely away from fossil fuel driven cars. And as you saw on the news review, it was a missing link that didn't make hydrogen cars viable commercially, and that was the transportation of the fuel. So I don't know. I think it's all very new. Go look up, do a Google search next week. Go CSIRO and see if they're matching with any company. Okay, and Alan just makes the comment then, and another company there has a new way of transporting it. Alan, I think that both stories are combined. The production process was, I think, palletizing hydrogen. I actually didn't listen very carefully. I saw it very briefly. I'll do a little bit of research on that, and you're absolutely right. Getting some exposure with, with these companies could be very, very interesting. And Alan's saying it was with ammonia. So they're converting hydrogen into ammonia, transporting it. I think that was the issue. And now they can transport it, then they can export it, and then reconvert it back into hydrogen within a car or whatever the process is. It all sounds very exciting. It is groundbreaking. Maybe we'll have jets. Maybe your jets will be done with hydrogen. I don't know. It's all good stuff. I love it. It's good. Okay, I've got one last question from Lindsay. Lindsay says, I'd like your comment on CIM ASX. Let's have a look. It was formerly Leighton's. Let's have a look at that one. I'm guessing you've got some exposure. CIM. Okay, so just putting up that particular chart. Okay. First of all, Lindsay, obviously this particular chart has had a few issues, but has, from a technical perspective, since early July, has put in an accumulation base and is doing a series of higher highs, technically speaking, on screen, which indicate it's shifted from a falling stock into a high momentum stock. Obviously, there's an announcement that came out somewhere where it had this huge gap. That huge gap, one moment, gap on screen, that is that big green bar, was so big it had to be absorbed and allow the 20 period moving average to catch up, so the rate of change in price wasn't too high. The market did a time correction and it's now accumulating and getting ready to break again. If you're invested in this and you're about to add to it, it's not a bad move. I wouldn't be adverse to doing it myself. Give me one moment. I need to look at, I haven't got the volume information that I have in the US. Let me just insert accumulation and distribution study. And just give me one moment. On balance volume. I'll show you what I'm doing in a moment. So what I'm looking for is, if I'm going to get excited about it, is that upward moving price supported by whatever volume indications I've got on screen? And the answer is, from the perspective of accumulation and distribution, absolutely. So there's this huge engagement which started in early June on the screen, which is the beginning of the move, and that would be a true statement for on balance volume. So what I can say is, technically it's in a high momentum move and it is supported by volume behavior, which says it's a good buy. I have seen these big moves be opposed by selling volume, which would tell you to stay away, but that's not the case in this particular chart. It looks really good. It looks like it's worth a buy, and I'm just going to write it down. Don't be surprised if I say I bought some last week. Next week, CIM. I'll have a closer look at that, but that looks pretty good, technically speaking. Another last little stock is LYC. Code sounds familiar to me. Haven't looked at it for a while. I probably own it. Okay, so first of all, while I've got volume up, volume has been declining and flat on the unbalanced volume. This has done a little pop, but it is in a downtrend. It's in a downtrend until it breaks its previous swing high in mid-July. So this is not what we just looked at. I would not get too excited about this until I saw a confirmed accumulation pattern, which may be evolving as this produces a higher low, which is not confirmed. So what I'd like to see here is a break of trend, accumulation pattern in, and then it's a definite hold or definite buy. And I think I own it. I think you've talked about this before. I've got it somewhere in my portfolio, maybe a small holding of it. Okay, guys, I think I have done everything I need to do. I've spoken way past what I normally do. Apologies if I'm holding people up. All looking really, really interesting, and I look forward to seeing everybody same time next week for what is hopefully a continuation of an increasingly expanding market. Thank you. Have a great week.